Hey, it's Mac with PriceActionTradingSystem.com, and this is Thursday, February the 28th. I've been thinking it was Friday all day long, and don't know why, but it's felt like Friday to me all day. So, but anyway, it's only Thursday, so we got another trading day today. I guess we had such great trading the last couple of days that it felt like it was already Friday, I guess. I don't know. But needless to say, today's Thursday. This will be our chart lesson for today, February the 28th, last day of the month. So I hope you've had a good trading month. I know this turned out to be a good trading month for me. Yesterday was just a killer day. And today has not been bad. It wasn't the kind of day we had yesterday. It's a little trickier on range days. To me, I like the range days better because they're much more predictable. However, some people, I have some people tell me they do really well on range days, but they can't trade trend days. And really, that is just a function of experience because you get, you tend to get better at what you see every day. And a lot of people, for the longest, we had these tight ranges and range days. And so a lot of people got very comfortable trading range days. And then but the market's been trending some lately, so it throws them off. They're trying to buy the lows all the way down or trying to buy or sell the highs all the way up. And you've got to be able to recognize when you're trending up versus trending down. And here's the trading range that we start out in, but look how flat that EMA is right there. And then look at the EMA here. We were trending up at that point. And, prices are staying above the EMA. Notice that. But look here, they're on both sides. They're on both sides. And then we start trending up and they get above it and they stay above it. And, hopefully you could find this channel. There's a channel coming down here. There's a channel going up here. And what I want to show you is this was the first range. And if you copy this, what you want to do if you break out of here, you're looking for your next target to be the same as that range. And if you drag this up, put it along those highs, and notice this. Let me get this just right so you can see it. There's your first range, and once we broke out, I was looking for a target equal to that range right there. And look at that, perfect. It doesn't get any better than that, people. And you can expect that, just like you can get a measured leg. A lot of times, you can, when you're in a range, it's the same thing. And sometimes you'll get the measured leg and the range. Let's just see if that was leg one, and that's leg two. It a little overshot that, and then one again. Really, when you're in a range like that, your best bet for target is a range of equal height. So this was a great place to sell up here. I marked it in green because it is a counter trend trade. But if you recognized what was going on, this was an easy trade. And I kind of went back and forth whether I should make it green or not. But for the newer people, it's probably a very obvious counter trend trade. And the place to really get short is with a limit order right across those matching highs right there. And that's the way to get short on that. And it's not always that easy, but if you recognized what was going on there, it was a great setup. I was actually done trading by then, but I was watching it and I wanted to take that trade, and but I just didn't want to get distracted. I had some other things going, so I just skipped it. But it was very tempting, just have to say, and you can see it would have been one of the best moves of the day. So needless to say, let's go back and talk about the trades. The first trade of the day I saw was this trade right here, and there's that nice reversal type bar. It's really a double top. You already had a couple of matching highs with these stems. It ticks higher, turns down, closes on its low. You get in right there. And it's really a failed second entry long. You're coming down, first entry long, you pull back, second entry long, and it turns down into a second entry short. So it's similar to a trap. It's much harder to see there, and it's much more convoluted. And you might have skipped this trade simply because, simply because you had these lows right here, but we'd already broken below there. So this is like a breakout pullback short as well. That's another reason to enter there. And you had to be thinking, we're going down here to test these lows, and that's where we went. We broke a little bit lower. We went into some overlap, and then we tried to go lower one more time and reversed. Great long right there. I actually got long with a limit order right there. It went a couple of ticks against me, reversed, and boy, look at that. Was I expecting that to happen? No way, no how. But I knew we'd probably come back to the EMA, and I knew if this was going to be a range today, we'd probably come back and test these highs, and that's exactly where I exited, right there. And then you're thinking, hey, I want to get short. There's a fairly decent setup bar there. It never triggered. It went higher, and I tried to actually get short right there with a limit order. It never got filled, so I went short right here below that bar. And it took a little while for this one to work on down, but another easy trade. Any runners were safe on this one and this one, and you probably would have wanted to exit here or that reversal bar, because that was really where your lows were to begin with, right across here. And you can see that. Really, you probably should have had them on those last closes, and that's exactly, looks like my line's off a little bit there. Yeah, it looks flat now. But that was, this was really your lows right here. There was your last lows yesterday. We failed below that, and then your lows set up down here. That's where you get the most touches now. And this is just a failed break lower that reversed immediately. You go long right there if you didn't use one of our other techniques, and I don't recommend that for anybody really. This is the place to go long. It's a failed second entry short that reverses, and off to the races. Runners were safe. Again, coming down, runners were safe. You came back and tested the high again here. You really could have got short here again, but you're having to get short way down here real low, and there was no trap above first, so you might have considered that a little bit of trap, but really your lines were probably up here at that point. And it's just kind of a perfect kiss. It didn't really tick higher at that point. I believe this moved down later, and then now you can see the little tick higher, but it was hard to see earlier, and so I just didn't like that trade. I didn't mark it, and you can see it didn't go nearly as low. It bounced where the previous lows were, so and then turned up. There's also two measured legs here, so it was really tempting to go long here, and you can see it's basically a perfect measured move right there, and so looking back on it in hindsight, probably should have gone long there, but I just didn't like the setup. We were coming off a failed breakout the high side, and generally you're going to come back and test the lows again, and notice we ended up doing that, but it had this two-legged correction first. But there's a nice double top. Here's your last high right where the closes were. We tested it once, we tested it twice. Look at that reversal bar. Great place to go short, and it took a little while for this one to work on down. It's real choppy, but the market's been kind of strong lately, and this is, you got to have, after a day like that, look at that day yesterday. I mean, there's where you make your money. I'll just be honest with you. Look at that. All day long, basically from 3 o'clock in the morning, just straight up, never really getting below the EMA for any amount of time. But after a day like that, this is what happens. You get a little consolidation, and you get a breakout, and they get all euphoric again. But, we're a little bit overdone probably, so it's going to take a little while. Maybe tomorrow we'll trend higher, or maybe we'll come back and test some of the areas that we didn't, looking for support again. We just have to wait and see. But anyway, great place to get short. You come down here. I drew this rather large because now it's really obvious that we've got strong resistance up here. We've been finding support here since yesterday afternoon along this area. So really you could have gotten long anywhere in here, but it's always best to wait on a second entry, and that would have come here. Here's your newest low, first entry long, pullback, second entry long. That's not a great bar right there, so what you might want to have done was try to get in with a limit order closer to the lows or whatever. Um, and this was a trap right here, and so you could have gone long right there, but you even had a reversal bar. So really, somewhere in here you wanted to try to get long. It didn't really bounce out of here strong, so it was a little bit concerning. But when we made that, when you see all these stems, you see that one little tick, and notice where it tested right to the last close. That's always a good sign. That's usually where you're going and testing. Um, Still believe this is the low of the range though, because that's where you get the most touches and closes. And then it's off to the races, back to the high side. You probably want to exit right here because you may get through here eventually, but you're probably not going to run straight through it the first time. You're going to back up. Also, those matching highs right there, great place to get short. That's what I did. Easy scalp, and then you should have been able to get this trend line right here off those highs, and you drag it down, and you see that it's just basically the same line, and that's where, and you notice it's bouncing off of it. But somebody sent me an email here asking about, I think they were getting short because it was a second entry short coming off the highs. But you should have had this trend line. You got to be drawing your trend lines. Don't forget. And when you start seeing them bounce higher in the lows, each one of those lows is higher. That's a good sign that we may be going higher. But the real reason you could go long here, it's a couple of them. There's the bounce off the trend line. If you saw that, if you didn't see that, there's all these matching lows with the closes here. They're basically over here too. It went a little bit lower, but not much. But really, here's the key to this trade. The failed second entry short, and you see this, here's your new high. We've been working up. We're making higher highs and higher lows right in here. Here's your last new high, and you come down. There's your first entry short. Pull back again. There's your second entry short. It looks really good. It looks real bearish. There's no real good setup there for the second entry short. Look at all those dojis and overlapping bars, and it's not a good place to be going short for sure. So then you see the trap and you realize the trend line's there. That's where you want to get long. There's not a whole lot of room here, but with that trap, this is just, and the fact that we went higher here already, there's a good chance that's going to be the next new area that we're going to test or whatever. And then it reverses, and there it goes. Easy scalp. Any runners were safe here. And then guess what? You don't want to be thinking long again after that unless this turns into support that's resistance all the way across here. And this one too, really. And that's the reason I drew this one in green, because this really, now you can see we're getting more touches across there. And if you were using the closes, you might have even brought it down to there. But I believe that's it right there. You notice you get more touches and reverses right there. And so it breaks above it, and guess what? It comes back and tests it once, tries to go higher, comes back and tests it again, tries to go higher, comes back and tests it again, and then goes higher. So there, you can see there's a couple of tests of that line. But then look at all that overlap. The fact that this high is just a couple of ticks higher. It's a real aggressive entry, but it fits the rules. I mean, this is when you go long on a breakout, when you couldn't get below that, and everything's now been above the EMA for 10 or so bars. That's a good sign that you're probably going lower. And notice that we're close to these upper highs. There's enough room to scalp out there. So if you saw that and you wanted to be aggressive, that was a good place to enter. And it was, it really didn't look back. It took off again. And then your next target is going to be equal to this, and you can see that. And once we got that target kind of going up there, it broke above it once and tried to turn down, but notice it never triggered. And so then you had another bar, and that stem's even bigger. And look, that could have closed right here just as easy as it closed right there. And so it's really on its bottom. You go short right there, and look at that, boom. And I wouldn't have been looking to buy here simply because we'd met our target. We had this trap. You got 3 pushes up. There's no real setup anywhere down through here. You might have considered you kind of got some matching lows across there, and I could see somebody getting trapped right there, going long. Um, as I was seeing, I was thinking, hey, it looks like it's really going to reverse. That's a great reversal bar, but it's basically turned into a breakout pullback short, and you never know about those. But what I would have been thinking was we already had the target and we had the failed break out of the top of that. Odds are we're coming back down and test this form of resistance again to see if it's going to act as support or not. And that would have been my target coming back down. Here's some interesting information though. If you did get trapped here, if you went long here, notice when that closes a doji, your goal should have been to get out of that at scratch, break even really, or with a tick or two. And you really had no option to get out of this other than maybe at scratch. And you can see when it, especially when it ticked lower here and turned up, yeah, it could have trapped everybody and gone higher, but it's got to break back above that bar, and it never could, and you don't know if that's going to happen. So just scratch that trade and get out if you got caught right there. That's my suggestion. Somebody asked me about, we talked about this one earlier, and when this trader got trapped in here, I'm trying to remember what his chart looked like, but I believe that his chart had a doji next maybe or something. So when that doji showed up next, that's your signal, because normally when you get it right, like this, it takes on off. Like this, it takes on off. You don't end the next bar. Look at this one. Look how it took off. Here's one that ended as a doji and bounced around, and it still worked out, but it's a little bit different. This is kind of in the middle. We're not at the far edges, and that's why I'm always saying the best entries generally are the far edges of the range. Those are the sure bets, because even if they're not going to go lower, you get enough bounce off of it or ricochet off of it, if you want to call it, whatever you want to call it, that you scalp out. You can see that you could get out of that trade there. But here, when you're further down into it, you're in the middle of the range. And the middle of the range is what I always call no man's land, because here you are in the middle of it here. You don't know if it's going lower or higher. It could do either one, and it's more of a gamble. And then you get over here and you're back in the middle of no man's land. It could have continued on going lower back down here, but guess what? It went higher instead. And so that's why you got to be really careful if you're not using the extremes. And you can see what happened if you use the extreme every time. Even if you sold it blindly, you might have got stopped out on that one. Did that one go more than 2 points? That would have been your spot at the moment. And if you entered one tick in front, I just want to see if a 2-point stop, if you just sold it blindly, 1875. No, by one tick, you would have survived that, and then boom, it turns off. But that's why, if you touch it once and it comes down and it goes back up, you better wait on a signal bar or a better setup before you enter again. That's my rule anyway. And then it comes back again, and even though it went higher, you still would have had an easy scalp. Look what happened every time it came down to the lows. Easy scalp or more. And so that's why I'm always telling you, stay out of the middle of no man's land, because it can get in the middle and get stuck on either side. And I've seen the center point, we'll just talk about this since we're in this. Let's see if we can find the center. That's probably it right there. It looks like it to me. And let's just measure it and see if that's dead center. There's the top half. Yeah, it's not quite dead center. Maybe another tick. Well, it's going to be one tick off. There's no way to get it dead center, so you'd have to split a tick, so that makes sense. But anyway, that to me looks like pretty much the center of this. So what you've really got is two ranges here within this range, and it's not uncommon to see you spin the bigger range and suddenly it gets in the smaller one that's half of whatever and gets stuck in there for a while, kind of like it did right here. And so stay away from these center spots, because as you can see, it really was stronger to the upside than it was the other, and that gives you a clue is really what it does. Notice how big this range is, but notice where most of the bars tended to be. There's much less down here. I guess if you go all the way over here to the overnight, well, even then, because you got all that up there. So you can see that. I mean, that's fairly obvious. And if you include that too, I would say there's the center part. And you can see it's bouncing on both sides. But notice that there's more support across here than there is resistance. So you don't, once we get down in here, we don't stay. We get back up in this part. So that's a clue. And I didn't even spot that earlier. But, you know, when you get to looking and drawing your lines, you'll notice these things. And so that's another clue that we're probably going to work our way higher. So anyway, hopefully that all makes sense to you. I hope you had a good trading day, and you see the support has not really held here. It looks like we're working lower. We may come down. There's only about 30 minutes left in the trading day. I'm doing this a little later than normal. So we may end up back down here. We may make a new low before it's over. We just have to see. But hopefully you had a good trading day. Hopefully your week's going well. If not, just keep sim trading, keep practicing. But most importantly, I tell people this as much as I can. I probably don't say it enough. The key is to get on the simulator and trade every day, and then leave your work on there or mark your work later and come back and study all your trades, figure out what you did right and try to do more of it, figure out what you did wrong. And when you see one that didn't work, try to figure out why it didn't work. Was it a trap? Were you getting in the middle? Was there strong support and you went short? Was there strong resistance and you went long? Figure out. There's always a reason why the trade failed, and it means you probably weren't reading the price action right. So figure it out and then try. And then the next day get back and do it again. And if you do that every day, it could take you a few weeks, more likely a few months, and it could even take you a year or more. Or up to a couple years, but at some point you will get it. But it won't come overnight. Very few people do this overnight, and I just want to make sure you know that. Don't fool yourself. Don't let your mind fool you into thinking that you're ready to go live when you're not, because trust me, you will donate your money to another trader. And I don't know any nice way to tell you. Don't go, other than to tell you, please don't go live, trading live, until you've proven that you can make money every day on the simulator. Because if you can't make money sim trading, you definitely won't ever make money trading live. So hopefully that makes sense to you as well. I'm going to wrap it up. We'll come back and do this again tomorrow, then we'll take the weekend off. But this is Mac with PriceActionTradingSystem.com, and we'll see you next time.